Hey, welcome back, everybody. And hey, so the news of the day, right? We're really kind of seeing a much slower start to this season than what we saw this time last year or even the year before that. We're going to delve into that. We're going to go into some of the metrics, talk about what's happening in April again, and then how that's translating into May. Catch you here. All right. So one of the things that we have been seeing each and every single week is a gradual increase in inventory levels. Now, mortgage rates, they've been bobbling around. They've been pretty steady over the last few months. Here's the funny thing, though. Buyers have been a little reluctant. And it's interesting when I follow up and I chat with other brokers in the area, a lot of perception that, buyers are just holding off a little bit. They're a little concerned about where things are going, where companies are going, how tariffs are going to impact companies. Are they going to start seeing more layoffs? So they're being a little bit more reserved. Now, is that a bad thing? No. Does that mean that we're going to see more of a balance between buyers and sellers? Absolutely. And I think that right now, if this was heavily weighted to sellers and this is heavily weighted to buyers, I think we are really pretty much dead nut center as far as a balanced market, even though we only have 2 months of inventory or 2.5 months of inventory. So we take a look at it. It says inventory levels are high, but the pace of sales are relatively slow. Not uncommon. Condominium sales stayed virtually unchanged from the March 2025. Yeah, they pretty much adjusted a buck. All right. As the number of sellers continue to outpace buyers, it is not surprising that the price growth has slowed. Recent media coverage identified not only socioeconomic uncertainties as tariffs and inflation, but also the willingness for buyers and sellers to make concessions on multiple factors. So we are seeing that today's rates are lower and have remained stable for weeks, sparking a continued increase in applications. When they talk about applications, they talk about mortgage applications. So it's not that there isn't a pent-up buyer demand, because there is. And we've got each and every week we are seeing more and more homes coming on the market, seasonally normal, but we're not seeing the buyer stepping up to the increase in activity or the increase in number of homes that are available for sale, which, funny enough, is up quite a bit over last year, albeit last year where numbers were quite low. So if we pop into this, let's take a look at our weekly headlines. So home price appreciation remains interesting. So we're seeing, again, that trend. You can see that on the upper right. We saw a reduction in the number of what the interest rate actually is. And so we actually dropped down 0.02. The Feds had their meeting, and they really didn't do a whole lot, which was expected. But the funny thing is, even though we didn't expect the Feds to do much, they were kind of, shrugging their shoulders, kind of posturing a little bit, hey, what are we going to do? The rates had already kind of made their decision based on some of the Wednesday reporting that came out, which is not uncommon. Feds will meet again in 6 more weeks and decide what they're going to do. Rate-wise, I don't expect a whole lot. They are looking at a potential recession, which, mortgage rates continue to historically go down during a recession. And so that would benefit buyers as we get down into the, I would say, 6.25, 6.2. And then again, we're going to start seeing a lot more buyer activity. And there's plenty of inventory out there right now for resales, which is, again, adversely affecting some of the new construction. All right. So if we pop in here and we start taking a look at some of the April metrics, which are going to carry into the, May metrics. So we can see that we went from, basically 1.5 months to 2.5 months of inventory. We gained a full month of inventory. We have experienced that, albeit new listings coming on in April was only 1,222 homes, or 12% increase. Now, When we take a look at pended sales, look, we were off at the end of April, according to condos and residential. We were only off 357 actual pended sales, and we only had a difference of 40 residential homes. Now, the interesting thing when you take a look at those two numbers, okay, and we take a look at rate, and we can see that, hey, we had a little bit of a bump in April there, and it has been coming back down in May, even though right now we are basically, 0.03 less than what we were, on the 15-year, equal as to what we were last week, or 0.3 or a third of a percent lower in rate than where we were at this time last year or last week. So when we start taking, actually it was last year. So when we start taking a look at all of the metrics as far as mortgage rates, those have been staying pretty consistent. But yet we're still seeing an increase in inventory, which helps out buyers. And pended and sold are doing okay, but they're just barely incrementally increasing year over year. When we talk about single family only, I do not include condos in my metrics when we talk about other elements, only because, well, to me, it skews the numbers of what most people want to look at, which is single family. So when we look at this, hey, look, okay, so our market time average days on market, is about the same. It was 27 last year, it's 27 this year, and you can see that by the middle chart. Then when we talk about list to sales price, we actually dropped down a little bit, which without a doubt, we are definitely experiencing that. When we look at the 7-day running average, again, for the fourth week in a row on a Friday, we have 1,410 homes. Versus 1,244 that went pended. Okay, so roughly have about 130 home difference. In other words, we had 130 homes that came on market, okay, then when actually pended, when historically, over the past few years, except for the last 4 weeks, we have seen more homes go pended, so we've been always drawing down the inventory, but now we're seeing consistently more inventory coming up, and a lot of that we just feel is just, buyer perception, hey, am I going to have a job next week? Things like this, which are having a very distinct impact. And we've had a number of buyers that are saying, hey, I'm going to sideline myself until, the stock market goes back up, or I'm going to do this. And that is not an uncommon thing. When we start to see this, is it a systemic thing? No. Why? Because when mortgage rates hit about 6.25, we're going to see all those people come back in. And yes, I do anticipate as we get closer to about Q3, 4, we will see those rates coming down. If the Feds do not raise or lower their rate until July, we could very well see, a solid 6.5, 6.3, to 6.5 rate consistently through the summer. And that's kind of what we're anticipating, since I don't see anything happening with the Feds until probably closer to July. All right. Now, what's super interesting, if we come back to this, you can see that we had 689 reduced homes. Okay. That is a great opportunity for a lot of buyers out there. And right now, super important for sellers. Just understand, buyers are super smart. Hands down. And they are without a doubt driving price, because the buyers are the makers of the market. Sellers are the takers of a market. And the buyers are being very clear what they are willing to pay. And it's interesting, there are some areas like Kirkland, in fact, chatting with a number of the agents, the market was doing great, and bam, it's like it just fell off. And not uncommon, Kirkland happens to be one of the areas it takes a little bit of a hit as we're starting to see a market shift. Not saying that we're seeing a massive market shift, but we're definitely seeing it there, which has said, last week when I said, hey, we're seeing some interesting trends. We're seeing some interesting trends as far as increased activity. Sales are still kind of just struggling along. We're not seeing that big push, and new construction is definitely feeling it. And we're going to go over that momentarily. So as we kind of roll in, remember, if you guys want super accurate information, make sure that, hey, like the video, let everybody know there's no marketing here, it's just solid information. Okay, let's get over the year over year. And I'm starting with this chart to be very clear. You see on the right 2024, and you see the arrow and the line that goes across. So when we pop over and we take a look at these numbers, okay, so right now, year to date, we're at like 13,000 homes. We were at 10.6 last year, and which gives us about a just shy of 2,400 home difference. It's only 805 homes more than last week. But if we take a look at that, we can see that we're the blue chart, or where the line ends, that would be April, May. And so we're just a little bit above that line, and kind of where the June is. So we're like 30 days ahead of where we were at last year. Interestingly enough, so if we blow this up, we're still 500 homes more sold than what we saw last year, 55 more pended year to date. Now, if we take a look at it, we have 179 or 197 homes that came on the market more than what we saw last year. And then, of course, our let me blow that back up for you. Then when we take a look at the fact that our sales are off by 25 homes, and we're up 215 homes on pended, that still gives us a really good indication the market is still moving along. Not as fast as what we expect. We are seeing more sellers coming on the market, and we're seeing new construction start to just not see the sales that we are normally seeing in the spring. And a lot of that we just we're playing back to, hey, we're only 2.5 months. We're really well balanced as far as inventory coming on and inventory going off. We've got still a lot of activity, but there's a lot of perceptions out there that, hey, is this a good time? Or, hey, you know what? I'm going to drive even harder on price. Now, that only accounts in certain areas because we are seeing some multiple offers still happening, just not as many. Interestingly enough, we can have a deeper chat about that if need be. Just post some information down below, and we'll be able to get you there. All right. When we talk about new construction, so interestingly enough, new construction numbers, all things considered, they're not horrible, but we're just not seeing the activity that we saw last year. We're 71 homes off from being, as far as closed sales, month over month, 24 to 25. And then, of course, the number of pended, that's only 2 homes off. Year to date, those numbers are creeping up, right? When we take a look at it, we have 574 more homes this year than what we had last year. So there's definitely a lot more options. Because, normally if we have between 1,500 and 2,000 homes, well, that's a significant chunk, as we would say. Interestingly enough, we have less new homes coming on market, which is not unexpected because we have seen a lot of the builders rolling out homes at a slower pace. Man, they've been doing so for the last 18 months. When we talk about pended and sold, those numbers, they're kind of struggling still. And the interesting thing is that on the year to date, though that disparity or that gap is getting bigger, and as it gets bigger, we're also noticing that we're seeing more resale homes coming on market. As an example, we have 2,400 more than we did last year, and that is directly affecting what's going on with new construction. So, not a onerous thing, but still something to keep an eye on. When we talk about bank-owned homes, so bank-owned homes, pretty much a same story, nothing super exciting. We don't have a whole heck of a lot going on. We deal with, just double-digit numbers, and that is translating into double-digit percentage numbers because a small shift is a big number. When we take a look at it and we say, oh my gosh, pendeds are up 47.8% from May. Okay, well, that's 9 homes. That's not a big deal. Then that's half of, that's 3/4 of Washington State. When we take a look at just the overall number of homes and the overall number of pending, you know what? It's situation normal. The chart, the yellow chart in the center, you can tell those numbers are super, super low. And you can see that it's just a normal wave as we're going through. Are we expecting a big shadow inventory of foreclosures? No, we're not seeing that at all. Our default rates, and that's the sad part. So most of the default rate reporting companies, they haven't even entered into 2025. We have a couple of other metrics that we monitor just to get an idea of notice of trustee sale, which is after the notice of default, and that could be anywhere in between, but we kind of monitor what's going on with that and what is that trend for some of the banks that we work with, to give them an idea, hey, what are we looking at? All things considered, I think the only thing about bank-owned homes is there's just not enough of them out there for investors to enjoy. Banks put them on paint, carpet, and vinyl. They get full market value. There you go. So remember, like and subscribe to the channel. Smash the subscribe button, in fact. Have a little bit of fun with it. And I will see you guys on the next video. It's a little cloudy today, but have a great day and enjoy your weekend. Take care.